Wealth isn't about predicting the future. It's about preparing one thoughtful decision at a time. Imagine two friends, same age, same salary, same education, same dreams. Neither is richer. Neither earns more. Neither is smarter. There's only one difference. One begins investing at 25. The other waits until 30. Just 5 years. Nothing dramatic. No financial disaster. No bad decisions. Just, I'll start next year. That sentence feels harmless, but over a lifetime, it quietly becomes one of the most expensive decisions a person can make. Today, we're going to see exactly why. And the numbers may surprise you, because the real cost of money is time, and time is a key determinant of exponential growth of wealth. Let's meet Emma and David. They graduate from university together. They both find good jobs. They rent similar apartments, drive similar cars, earn the same salary, receive the same raises, live nearly identical lives. Neither wins the lottery. Neither inherits wealth. Their futures appear identical, until one small decision changes everything. Emma decides, I'll begin investing today. David smiles, I'll wait until things settle down. 5 years. That's all. 5 years don't feel long. You celebrate birthdays, change jobs, move apartments, travel. Life keeps moving. Emma barely notices her automatic investments. Every month, money quietly leaves her account and begins working for her. David intends to start. Every January, he tells himself, this is the year. Then life happens. Bills, vacations, unexpected repairs, promotions, busy schedules. 5 years quietly disappear. Here's what Emma didn't see. Every month, she invested quietly. Nothing exciting happened. No fireworks. No overnight riches. Most months, her portfolio barely seemed to move. Some months, it even went backwards. If you had checked her account after just 1 year, you might have wondered if investing was worth the effort. But something invisible was happening beneath the surface. Not because Emma was smarter. Not because she picked perfect stocks. Not because she predicted the market. Something else was beginning to work. Time. Time was quietly multiplying every dollar she invested. The greatest advantage in investing isn't brilliance. It's allowing time to do what people cannot. Imagine pushing a child on a swing. The first few pushes don't seem to make much difference. But with every gentle push, the swing climbs a little higher. Compounding works the same way. Your investments earn returns. Then those returns begin earning returns. Then those returns begin earning even more returns. It's growth, building upon growth, like a snowball rolling down a hill. At first, it hardly grows at all. Then suddenly, it becomes impossible to stop. Most people quit during the tiny snowball stage, not because investing failed, because they expected a miracle instead of mathematics. Now, let's return to Emma and David. Emma invested $500 every month beginning at age 25. David invested the same $500 every month. He simply waited until age 30. Neither earned a higher salary. Neither invested more each month. Neither found a secret strategy. Only one difference remained. 5 years. By retirement, Emma's portfolio had decades more time to compound than David's. Those 5 missing years didn't just cost David 60 monthly deposits. They cost him years of investment growth on every future dollar. That's the hidden price of waiting. Not merely fewer contributions, but fewer years for money to multiply. Here's something surprising. Most people don't delay investing because they're lazy. They delay because they're human. Some believe they need more money. Others think they need more knowledge. Many are simply waiting for the perfect time, the perfect market, the perfect salary, the perfect economy, the perfect moment. But perfection has a way of never arriving. The market rises, then falls, then rises again. Life gets busy, bills appear, children are born, jobs change, unexpected expenses come, years quietly pass, while tomorrow keeps moving further away. The greatest obstacle to investing isn't usually a lack of money. It's the belief that there's always more time, Economists have a phrase for what we've been talking about: opportunity cost. It sounds technical, but the idea is simple. Every choice opens one door, while quietly closing another. When you delay investing, the cost isn't only the money you didn't invest, it's every future dollar those investments could have earned. Imagine planting 2 apple trees, one today, one 5 years from now. You water them both. You care for them equally. But the first tree enjoys 5 extra years of sunlight, 5 extra years of rain, 5 extra years of growth. The second tree may still flourish, but it can never reclaim those first 5 years. Time, once lost, cannot be reinvested. Perhaps you're watching this and thinking, I wish someone had told me this 10 years ago. Maybe you're 30, 40, 50, or even older. If that's you, remember this. The second best time to begin is today. You cannot change yesterday, but you can change every tomorrow that follows. History is filled with people who built meaningful wealth, not because they started first, but because they finally started. Progress has always been more powerful than perfection. The market doesn't ask when you wished you'd begun. It only responds to the decision you make today. 5 years. It doesn't sound like much until you see what those years can become. The greatest investment advantage was never finding the perfect stock or predicting the next market crash. It was giving time, the opportunity to work, because wealth rarely appears all at once. It grows quietly through hundreds of ordinary decisions. A contribution made today, another next month, then another, until one day you look back and realize those ordinary choices built something extraordinary. So don't wait for certainty, don't wait for perfection, and don't wait for someday, because someday has a remarkable way of becoming never. Start with what you have. Learn as you go. Let time become your greatest financial partner. And years from now, your future self may thank you for the simple decision to begin today. But if the math is so powerful, why do millions of intelligent people still wait? The answer has very little to do with money, and almost everything to do with human psychology. Remember, wealth isn't about predicting the future. It's about preparing one thoughtful decision at a time. Giving enough time to build your portfolio. Starting early enough as you start earning early in life to guarantee a stressless growth through your most fruitful years, guaranteeing your later years when earnings decline. Until next time, keep learning, keep growing, and invest with wisdom. Subscribe to Lily Invest for calm, practical investing explained simply.